Data always helps me in my analysis to see what is happening, and I want to go over the results for the stock index portfolio 18 and the Blitz. When we add the Blitz we alternate back and forth between these two. And so on 11/1 stock index portfolio 18, it was up 25,192.50 in November. 11 for November 2022. Through December the 2nd, it's down 10,372.50 and up 14,820 since it started. The Blitz is down. It was up in November, had this drawdown right here the first 2 days in December along with the stock index 18, and so it's down 86.82.50 since November the 1st. If you just traded this alone, we alternated, keep in mind. So what are the alternating results? The alternating results, even with our drawdown, so we have 38,780 hypothetical in November. We did a little better in real time because of a FOMC minute situation that I explained. And then November, and then through the second day of December, it's minus 22,670.50. Plus 16,112.50 are the results since November 1st. If we're going back and forth between these on the risk to worst case drawdown, so that puts it in perspective for me that even though we had this drawdown the last couple of days that was larger than the stock index portfolio 18, which we originally started trading in November, we're still a little bit ahead, only $1,300. Not a huge difference between these two and real trading. You can get technical errors or extra slippage and commission can make up for that difference, but it's around the same. What we did is we put ourselves in an opportunity, in a position to capture some big moves with these extra strategies. And so today, last 2 days, we've had this worst case drawdown by $3,000. And so our real drawdown is not that big because we alternated to the stock index portfolio 18 at the right time, then alternated back. So our real drawdown is around this number, 22,667.50, since we were at equity peak at the end of November. And so this is the stock index portfolio 18 plus MIT plus Blitz. And so it made a worst case drawdown by about 3,000 today. And now we've seen that before. We actually saw that last month. And I want to show you in the stock index portfolio 18 is this. It's 10,000. It's down 10,000 out of 26. And so, but last month it made a worst case drawdown by 3,000 and then bounced all the way back. And so, as markets get more volatile as we go forward in time, there tends to be more volatility in the markets. And so, I think that we're due for a bounce. And so, there's two ways to trade this. The playbook for this is to stay with this and have a stop loss. And have a stop loss that you want to work with on an intraday basis where you stop and look for a bounce. And so that's a bit subjective. I know it's subjective, but we've done that before and it bounced. So you could have that, at risk an extra 5 or 10 grand. And so it depends on where you are in your trading. I'm talking about if you're trading E-minis now between a 200K and between 200K and 500K account. And so you see it's up 16. So if you risk 5 grand, you'd be up 11K over the last 2 months, or since November the 1st. If you risk 10 grand, you'd be up about 6K with any differences from slippage and commission. So the playbook, though, is for what I have the playbook for is a new portfolio with not many changes. And this one risks 5,500 to a worst case drawdown. Or you could stick with the stock index portfolio 18. You always have this risk of largest losing day as well. And so you either make the adjustment at the end of the day, realizing that you could have a largest losing day, or an intraday stop loss as well. So those intraday stop losses can be like stop running. You can stop right there at that, and then it can bounce. And so this is where this portfolio is, and the thing I like about this is this kind of matches our actual drawdown. Our actual drawdown in live trading is about 22,000, and so this matches it. So we're doing a little bit better on the drawdown than this. So we're matching this, and I'm going to show you the portfolio setup. So the Blitz 10 that we have is including 10 strategies, or let me see, let me scroll down here, I had some other notes. So the Blitz 10 had 10 strategies. 5 had market internals, 5 did not. And so we removed the 5 strategies that do not include market internals. Adaptive moving average, zigzag, EVP1, gap continuation, 2019 parabolic VSD, and then we also come back and add gap continuation 2023 because this one actually does have market internals. And so we're actually adjusting this initially by 4 strategies because we're kind of replacing this with the 2023 version with gap continuation that has market internals. And so I will be sending out the updates this weekend for these workspaces. You simply can delete all these strategies from the current workspaces. Additionally, we're removing these 2 strategies, and so you only really need this strategy. So if you have the stock index portfolio, you need this strategy. You can delete the others, and we have 21 strategies instead of 28. Kind of a 16 versus 21 alternation instead of 18 versus 28. And so pretty interesting setup here. So here is the setup, 21 strategies, and we still have robot. We could take robot. You could take robot out if you wanted. It doesn't make a huge difference. In a portfolio like this, your risk to worst case drawdown is a little higher, even though robot has been on a losing streak. Still waiting for a winner to bounce here on that one. And this total profit over drawdown is 56.22, which is higher than what we had on the stock index portfolio 18. And so this is a scratch worksheet. I need to update all the details. I've manually put numbers in here, so the formulas are off now. But this is the update for Monday. You, as a subscriber, have the opportunity. If you're not a subscriber, you can subscribe. I'm going to show you where you can do that at the end of the video. But if you are a subscriber, you have the option to trade. You could trade the stock index portfolio 18 if you wanted. This is right here. Stock index portfolio 18 is 18 strategies. You could trade the stock index portfolio 18 plus Blitz, and that is 28 strategies. And you could, wait for that bounce. Oftentimes we get that, and we're due. I want to show you market-wise why it's a good opportunity as well. We've gone over the cycles of this portfolio in the daily video, and we see this is a very normal cycle in the drawdown. And so you could also trade this setup right here, the new setup that I'm going to be sending out. And I want to show you the details market-wise why this could be a good approach. So we have a VIX divergence inside of a VIX divergence, and you can see this hasn't happened as much. This type of VIX divergence that I've backtested here, and so it is. Here is the equity curve going back to 2003. There's only been 5 trades, and so not a very frequent occurrence. So not a lot of statistical validity in this, but the principle is still there. It's really strange to me how the VIX has sold off so sharply, and the market has just kind of been taking its time, really taking its time. And so it's one of 2 things. It's going to I would think it's either going to sell off because of this extreme VIX divergences that we keep seeing. So divergences don't always mean, in general, I think the VIX is usually right, smart money, and so the stocks could eventually surge. I'm not a bull, but I'm just going with what the market is telling me. It could be wrong, and the market could roll over. So we're just in a seasonal time of year, and it just seems like it's impossible for the market to go down. The bulls may not be running it up very much right now. Be kind of weak in their buying, but they're certainly propping it up and not letting it go down. You saw it today on Jobs Friday, a 1-minute move down in the Nasdaq, and the entire rest of the day was spent mean reverting that sell-off. So we've seen in the past where we get that sell-off, it mean reverts all the way back to there, and then it accelerates again once it returns back. Sometimes it can do that. I thought it might do that today, and that would have put us in some pretty good profits the way we were positioned, but it got to here and it rolled over. So at the end of the day, so that's what happened today, and I just surprised at how there's such a lack of follow-through on a lot of these days that I've seen in the past where there's VIX divergences and the bulls are in stealth mode. There's eventually a pop in the market, a little bit more of a pop. We got a little bit of a pop at the end of the day, but it just closed the gap and then pulled back. So, and the reason I say that is because it's hard to short this market. It's easier to go long, and if we get this big surge in the VIX divergence and this big rally that we had in December last year, there could be some really good gains going into the end of the year. It could also be some good gains on the short side. It's been so choppy in 2022, especially the second half. Day trade shorts have been really choppy, so it's been harder. But I do anticipate that there'll be a season and a time for that where shorts could be more easily profitable and the sell-offs will be stronger. I don't know when that'll happen, but I do anticipate a season that will come for that. But right now, I would think that the seasonality is on the long side and that we would see more upside as we go into the end of the year. And because of this VIX divergence, I think that this could be a good time to take long trades into the end of the year and capture some big moves with our trade.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.